What is going on, investors? Hopefully you had a great day out there. Time to talk about Cisco Systems, ticker symbol CSCO. Widely held stock in the stock market. You got a $206 billion market cap. Got about a 3% yield on this one. After the bell, they announced a 37 cents per share quarterly dividend on this one. Now, they just reported their earnings after the bell. We'll jump into the numbers. We'll take a look, see what might be causing the decline there. Now, but more interesting, this stock has pulled back onto a very long-term kind of level of support here, and a level of resistance for Cisco. We'll talk about what that means for the stock going forward. I think you're going to want to hang around and take a look at that. Now, Cisco reported after the bell. We see here this stock is down about 5% in the after hours after being down about 1% during the regular session. So this stock is selling off pretty rapidly here in the last 2 trading days. Now, for the year, we're up about 2%, but for the last 6 months, the stock's up 3%, but really the story is over the last month, this stock is actually up pretty nicely, up about 8%. So we'll see evidence of that as well on the stock chart. Could be that just people are taking some profits. Now, probably the key takeaway from the earnings outside of the actual numbers, which we'll talk about here in a minute, was that they gave guidance for Q3. So Cisco's in their Q2. They just reported those numbers today. But Q3, they're actually guiding for revenue growth between 3.5% and 5.5%. Expectations was at 2.8% growth. So this company is actually doing nicely on that revenue growth. Now, from a profit perspective, they're actually in line with consensus, but it appears that they're going to get that revenue growth back on track here, growing at Cisco. We'll see if that is able to get these shares moving higher in the coming weeks and months ahead. Now, taking a look here, we've got our 3 months ended here, January over January here, and we've got our 6 months. Since this is Q2, they give us a 6-month view here. We see total revenues are declining at this company, although they're basically flat year over year on a quarterly basis. You were at 12 and you round that number up, you're about at 12. Now, for the last 6 months, you're down a little bit here. We went from 25 billion down to, we'll call that 23.9 billion. So down just fractionally, but gross margins are really good at this company. Okay, this is why they're able to pay a dividend. This is why you do see some steadiness when this company can get things going in the right direction. Now, gross margin last year was at 7.76, basically identical over the last 3 months. You see for the last 6 months, we were at 16.2 billion. Down to about 15.4 billion, but again, basically flat, and obviously a difficult environment that you've got going out there. Now, we've got some other expenses here as well. We've got research and development, the sales and marketing, general administrative, some other cost as well. And we see here again for the quarter, basically flat. So I think investors, when we talked about how the stock was up about 8% over the last month, the stockholders kind of bid this one up. And then, you come in here and you basically have flat year over year kind of results. And I think that had some shareholders deciding to sell today and yesterday into the after hours. So you had for the 6 months, you've got $7 billion of operating income down to about 5.8. But again, solid net income. You see here for where the revenue is coming in, basically flat in America, down a little bit. And I believe that's Asia Pacific. And then in Europe, you're up about 2%, but basically just kind of flat across the board over the last 3 months. We'll see if they're able to turn that around. Last thing I want to show you is the balance sheet is pretty nice at this company. We don't see it completely levered up like we do see with some of these companies that are worth $200-300 billion. Like a Cisco is. We see here cash and cash investments come in right about $30 billion. You were a little light of that even back in July of 2020. We see total assets coming in at about basically even, year over year or so, or the last 6 months. Now, here's the thing is we got a long-term debt here. Not much, quite frankly. You got 9.5 billion. It's down from 11, but it looks like that 2 billion just got pushed over here to short-term debt since short-term debt went up by about 2 billion. So we'll see if they pay that off or if they refinance it or what they decide to do there, but not bad. I mean, you got about 14 billion total debt there, at least from a conventional debt perspective. And again, you have basically double that just on the cash side, not including your receivables and your inventory and things like that. So very strong company from a balance sheet perspective and obviously a consistency perspective when it comes to their revenues. Now, here's what's happened to the stock chart. I have this way zoomed out because I just kind of wanted to show you that this line here, right where the stock is sitting at, we'll just call it, the stock's sitting at $45.92. We'll just call it $46 just to kind of give you some round numbers to kind of get in your head. So $46 a share is a key level for Cisco. We see here it's acted as support here, broke down here, and then acted as support again. And then on the way up, didn't necessarily act as a resistance point, but was kind of a consolidation area. Same thing. The stock broke down here and it's consolidated right here around $45 to $46 per share. Now, over the last couple trading days, we've actually broken up above that. And I think you just kind of brought forward some earnings, brought forth maybe some anticipation in good earnings for Cisco. And then after the bell, you kind of have some profit taking. Now, two things that I see here. We'll zoom in a little bit. Two things tend to happen here with Cisco. We see here we have these big declines in the stock. When it got rejected at this $46 level, we had seen some big declines in the stock. So it doesn't make me want to just jump in on this one, but we do have an increasing 50-day moving average, which is this green line here. So that should act as a little bit of support underneath this $46 level. And it's really just like $1 underneath that. And then if this stock can break above 46, this is really probably what I'm looking for, is a break above 46, probably back up into 47, because then that, in my opinion, could probably bring $49 back into play. And I think you could play this a number of different ways. One, you're just buying Cisco, you're buying and holding it. You like this 3% yield. You're just going to buy and hold. This is not a bad area, in my opinion, where you want to accumulate shares. Would I go all in and just unload my whole account onto it? Absolutely not, because this stock does have big areas underneath it that are pretty recent. Just a couple months ago, this stock was down into the mid 30s, and that's certainly something it could revisit again. Now, from a trader perspective, if you want to trade this one, I think I'd put my stop loss right at 45, we'll call it $45, which is right where our 50-day moving average is. I would want to stop out right there, because if we break below that, then my guess is you have, lower prices to come for Cisco. But you have basically $1 in downside in terms of where I put my stop loss. And I think you've got about $2 to $3 in upside getting back up into this $48, $49 area, which we were just a couple days ago, actually, with Cisco. So decent risk reward if you want to play that. It's not the best setup. It's not like the world's greatest setup, but it is not bad. So if you want to play it from that perspective, depending on how you want to look at Cisco, I wouldn't blame you for either way. So that was Cisco. Hopefully you guys enjoyed that one. Maybe leave me a comment down below what you think about this one. Love to hear from you. Good luck with your investments.